Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the last week and try to learn something from that and plan for a better trade for the next day. First of all, wish you all a happy new year 2023. And let's get on the charts. So, this is the weekly charts that you're seeing. So, Nifty on the left side and BankNifty on the right side. It's a good bounce, a change in priority bounce like we had talked about in the last week. It was a good dip and a bounce has happened with a wide range bullish candle on the Nifty and the Bank Nifty also. Look at the candle size. Look at the previous candle, right? Which is a huge dip, right? Almost all of that is recovered now. 3/4 of that is recovered, you can say. That's a weekly charts that is showing. So remember, we had another major resistance zone from where it had broken down and price made the all-time highs and then came back to the same place in confluence with the Fibonacci retracement as well as the 20 DMA, 20 weekly moving average basically on both indices, and that has acted as a lever and it has bounced up. Now there is, if the change in priorities what we are seeing, then there is every chance that it can bounce up further on the weekly basis. Let's look at the daily charts. The Friday was a sell-off, right? You can clearly see that to the wide range bearish candle on both indices, right? So the bounce for the most of the part of the week got negated to the Friday's pullback, right? There was a resistance on the hourly charts, and that's exactly where it got stuck, right? Let's get into what exactly we gained. The lost 300 points, like 1.69% of up in the Nifty, and it's a wide range bullish candle, and it is closed above the 20 weekly moving average. We have seen that in the previous slide, and yeah, we know that it has retraced 5.7% after making the all-time high from a breakout from the trendline resistance. We have seen that change in priority is where the previous resistance would act as a support and the bounce happens from there. That's probably what is happening in the weekly basis on both indices. And if you also 3.17%, that's a much bigger move, 1,322 points up as compared to the previous week, and we have a wide range bullish candle there also, and it is closed above the 20-week moving average there also. And the week and there also it is a retracement that has happened, is almost near to 6%, and then that is after an all-time high that happened from a breakout from the trend line. We have seen that change in priorities actually working there also. Daily time frame also, we had seen that it is an 86-point loss, less than 0.5% on the Nifty, and there is a dark cloud cover bearish pattern. So it's an opposite of piercing pattern basically, right? So it is moved above and then retraced more than half of the previous candle. So exactly here more than half is not had happened, but then retraced a little more back. So not exactly a dark cloud on the Bank Nifty, but Nifty it's definitely a dark cloud. Dark cloud is bearishness. That's a confirmation of a reversal from there possible on the short-term daily charts is what we're talking about, right? So more cutters there, 0.61, 266 point loss on the Bank Nifty on the Friday, where it was closed about the 20 as well as the 50 exponential moving average, daily exponential moving average. So the thing is, Nifty could not do that. Nifty has closed below the Demat. So moving average support is, so the Nifty seems to be weaker than the Bank Nifty is evident from the support where it has closed. The closing is important. And moving on to the Bollinger Bands, you can see that it is it's an expansion that's happening. The beginning of a contraction, but more of an expansion of the bearish bias is what the Bollinger Bands are indicating. And here we can see that it's a contraction. Right? So the sideways movement is more or less confirmed on the Bank Nifty, but Nifty is still not got into the sideways one fully. It's still in the downside expansion mode, not on the contraction mode, as indicated on the daily charts for Japan's. We had seen this, and let's get into see supports and resistances. Right? This trend line is not, that's resistance zone where it is reversed. So this clearing above that will be the major thing. So 18262, 18442, 18550, 18678, like that it goes on the upside. Resistances downside 1870, 18,000 rounding number, 17959, 17774, 17652, 17569. That's all the supports on downside. It's a combination of Fibonacci retracement levels, previous resistance levels, and swing lows, and so that's how the resistance and supports is formed. This is for the Nifty, right? So right now we are taking a support from the Fibonacci 38 and then bounced up. That's what happened, right? So PSL is previous swing. This is actually PSH. It's a mistake. So PSH resistances R indicates resistances downside. S indicates supports. PSL is previous swing low. PSH is previous swing high. Right? Swing lows are taken as support. Previous has taken as support and resistances, and then Fibonacci also is considered for framing that. BankNifty, look at this. Immediate resistance upside will be 43,339, 43,615, 44,151. Downside 42,961, 42,560, 42,231, 41,840, 41,586. That's our support. Right now we can see that it is taken a support of 23 Fibonacci retracement from the from the bottom. So previous swing high resistances are marked here, previous swing low resistance are marked down. So it's BankNifty, and then moving on, the momentum. After having seen the price and the price patterns, let's move the momentum and see what it says. So it's the weekly on the Nifty and the BankNifty that you see on the left side, and daily is what you see on the right side. So weekly BankNifty is strong. It has beautifully taken a, you can say it's a range shift, the momentum, taken a support of the RSI 60 and then bounce up. It's beautiful bullish position that they have. That's the momentum. Momentum is bullish on the BankNifty. But Nifty, look at this on the top. Nifty, it is still resisting below the RSI 60. It has not climbed yet. So Nifty bearish. The sideways, not basically bearish. The weakness, it's a sideways momentum, not a bearish momentum. So weakness continues although the momentum is rising. Weakness as compared to the BankNifty. Nifty strongly positions itself with a bounce from the RSI 60 support. That's a weekly. So weekly it's bullish in BankNifty, not sideways, continues in the Nifty, and on the short-term daily charts it's sideways for both indices, sideways and falling, right? Weekly it is rising up momentum that is still there on the medium-term charts, right? So overall we can say it's BankNifty has got a some edge on the medium-term. The momentum is a little more. Otherwise it's sideways action that you see all over on the time frames, right? So this is another look at that. The ADX is the trend indicator, which is again it's in the bearish zones on the Nifty, but in the bullish zones on the BankNifty. That's on the daily charts. So the bearishness is there on the daily charts, and that bearishness has got not enough of strength on the Nifty. BankNifty, the bullishness is there. That also does not have not enough of bullish strength. But on the weekly basis, if you see, you can see that it's in the bullish zones. BankNifty is in bullish zones, DMI positive, but it's not having enough bullish strength. So BankNifty and BankNifty both are in the bullish zones, DMI positive. So the trend is strong on the medium term on both indices. Right? The trend is contradicting in the short term between Nifty and BankNifty, but both having Nifty bullishness and BankNifty bullishness, both does not have enough of strength in the trend strength. The ADX indicator is what we are talking about, right? Directional ADX indicator. So that's about the trend. So more or less sideways short-term momentum, right? And more of bearish momentum in the short term is what you say, but medium term things look much better, right? Things are not that bad on both the indices, but we can understand from the momentum and the trend analysis, right? Let's go ahead and see volatility. We talked about a bit of volatility by studying the Bollinger Bands. Now another way of the sentiment greed fear indicator is the VIX, India VIX, which is 8.2% up. Remember, 8% down. Sorry, there's a mistake. It's cooled off 8.2% down. It's a mistake there. So VIX has cooled off 8%. Remember last week we had a VIX that shot up 15%, and now half of that has come back and it's at 14.86. So VIX is mean reverting reach. If you look at the charts here, we can see that it had taken a beautiful support near the 13 kind of levels and then mean reverted and shot up. Now it has come up back again to the 14.8 kind of supports. Well, there is every chance that it can further shoot up to 16 kind of levels. Once again, there are possibilities for me. VIX is, you don't know when it would stop the continuous movement downside or upside. Anytime it can mean revert and go the other way. Yeah, but it's in the lower regime right now, but it's on the edge of the lower regime, right? Because it is already shot above the 15.5 kind of levels, and that's no longer a lower regime. So it's on in between the lower and the higher regime, you can say. Right? The higher is of course 20. Once the 20 is there, things are different. But as of now, it has cooled off a little bit. This is what we understand from the data. Now we are talking about open interest for the Nifty on the futures open OI is showing that it's short build up and long unwinding on the BankNifty. Short build up on Nifty, long unwinding is it's bearish nature, both in bearish nature basically. For the January 5th, 2023 weekly expiry, open interest, the maximum levels. You can see that in the next slides, but before that, the put call ratio with the highest number of put and call writing. If you consider the data, it says that 0.69 and 0.70, they both are not bullish enough. 0.69 for the Nifty and 0.73 for the Nifty. They're neither bearish, right? So they're in between, right? They're sideways, so they're not bullish enough is the right word for that put call ratio on the options OI for the January 5th expiry. Look at this open interest data that we are seeing. You can see that for the Nifty it's 17,500 to 18,200. This is where the highest put and the call rating is in. The price is at 18,200, and the VIX is also not that high still. The option writers are fearing that the volatility could go up to pushing the market to 7,500, but there are 4 or 5 days more left for expiry, so you never know. So 18,200 has got, it's kind of strangled. That's where the people have put the maximum put and the call rating both, because the second level of higher support is in at 18,200 after the 17,500, where the highest is there. Second highest is 18,200 put rating and 18,300 call rating. So that's how the levels are there. And BankNifty is 43,000 for the straddle again, where the highest put and the call rating is happening in the same place, right? So that way, BankNifty, people are not expecting it to move too much, because the second level of highest put rating is seen at 42,500 and 43,500. So the highest call rating is there, right? So the bullishness is identified by the option writers in the BankNifty and Nifty. They're not sure, but that's the reason why. They have written this. I'm not sure that 17,500 has come in as the highest put rating place. Right? So this will change it's a weekly expiry the data that we are analyzing, and it may vary anytime. So, but as of now, this is what it shows. Interest. Looking at the sectoral watch of the IT sector. IT sector is. So this is last week's information that we're talking about. It was up more that is seen in the IT, the metal, and the auto. And you have down more seen the pharma, FMCG. That's it. Right? So reality also has moved up actually. Just beaten off earlier 6.5% or something previous big fall day. So reality, auto, metal, IT has moved up last week, while pharma and FMCG, the mostly defensive stocks sectors, they had fallen out, but not too much. Pharma is 1.5% down, 0.5% in FMCG. Right? Talking about that. So it's IT had not moved too much. The movement up also did not happen too much. 1.3% up, 0.5% up on metal, 3% up, and reality was what made the most, 5.5% up. But if you see, it's all. There's no bullishness. It's all sideways mostly that you can see from the momentum perspective for the short term and medium term. So idea is sideways on both time frames. Metal is having an intensive candle and it's sideways, and weekly charts is having a bullishness because it was doing good. Then every year it was doing good actually, the previous 2022. Auto sector is it's having a wide range bullish candle. It has come back, but momentum is sideways on both time frames, and again sideways pharma on both time frames. Pharma is also in the bearish zones. On the short term, it's bearish zones, and medium term only you have a sideways. So the weaker sector is from pharma. FMCG also is having short term bearishness. It does not come back and climb into sideways, but medium term is having sideways. So reality is again sideways. So pharma is only one that has got bearishness in there, and overall stronger sector of course is metal because the bullishness is there in the high time frames, and although it does not climb back on the bullishness in the shorter time frame. So it's a mixed bag. Let's see the charts of this sector. So left side here you have the IT, and it had fallen prey to the resistance and then trying to take a support and then climb back. Momentum sideways, definitely. We're talking about all charts on the medium term weekly. And metal has been breaking out, but still all-time high is not breached. It had hit the resistance at the all-time high and then fallen down. Equally recovered the next day. Or it has climbed back to the bullish zones. Auto is has been sliding down, but did a quick comeback after a big fall. Right, so it's the sideways momentum. Pharma is also broken out from the bear zones in the short term, but sideways in the medium term, and it is broken, hit a resistance earlier as you can see, and then fallen back to the same parallel channel from where it had broken out. FMCG has slipped into the sideways momentum after staying bullish for so long. Momentum has slipped, and trend is about to cross over the medium term. So FMCG is in the bearish in the short term as well. So two sectors are bearish in the short term. One is FMCG and the second is pharma. But the charts that we have here is not short term, they're medium term. So reality has taken a support close to the major support zone, and then some kind of double top is getting formed there on the weekly. Just taken a support on the momentum RSI 40 and taken bounce. So that seems to be a good place of support for the reality sector, and bounce is decent enough, 5% above for this week, right? So that's the different sectors, how do they perform. And then industrial sectors, after having analyzed that, let's look at how the heavyweights, the heavyweights are those that contribute the more to the index of the Nifty 50 basically. The HDFC Bank is clearly showing bullishness. It's a posterior reverse divergence, it's bullish in nature, and it's a flag pattern combination. But it has taken so long, taken so long to break out from that, because it's a major break zone for the entire previous 1 year, and then any breakout from this 1726 will be big, really big. That's what I think. So clear bullishness with HDFC Bank. HDFC also bullish. There is a flag pattern also there. Momentum is also bullish. There is no divergence on bullish nature there, but that is there only in the HDFC Bank. Reliance Industries has been consolidating, as you can see, after the breakout from the small cup pattern for long, almost a year. It's somewhere in the middle right now, sideways momentum. Moving sideways since long is what Reliance is doing within that channel or rectangular box, or whatever I call it. IT stocks among the heavyweights, you can see Nifty and the TCS both have hit the resistance and fallen back and now tried to support and then trying to climb back again. ICICI Bank was excellent bullish in nature, but it has slipped in sideways, and then now there is some kind of divergence of bullish in nature that is forming and is trying to climb back, and it's more or less confirmed that it's coming back. Kotak Bank sideways movement the entire year, and that's exactly what it is doing. It moves up some 780 to 2254 levels and then falls back up to 1635 levels. That's what it has been doing for long. So just have to wait and watch when it is breaking out. That's analysis of the heavyweights. Now, institutional participation was interesting. There's 5,750 crores of selling that happened for the Fyers last week. So it was Fyers was selling. They were selling less than 1,000 crores. Very less selling was seen almost all the days, but on the last day of the Friday, the selling had suddenly turned out to be huge. More than 2,000 crores of selling has happened. The last 2,950 crores of selling happened on Friday, on the last day of the trading of the year. Big selling came in. So affairs are in selling mode, but DAs had been buying. It's a 5,000 crores of buying that has happened, and that's what is holding the market. The moment DAs are not there, the market is crashed. And so affairs are in selling mode, and they had been in selling mode. All the buying came in between. They had been in the selling mode then 2022. So that's a little bit of concern. When would the fire, money would slowly start flowing back to our markets or not? Right? Net long for the derivatives also from the FIDS side has moved up as per the last week's data. So that's how the institutions have participated in the market. Looking at the global market and the global commodities, let's start with the dollar index. Dollar index has fell 4.80. It has been moving down, it's having bearish momentum. Around 3.4 is the loss in the recent times. Will it fall down below the 100 is what you have to watch. So it's at a major support zone from the breakout area. So there is a chance that it will consolidate here for a long period of time and then eventually bounce up also. There is less chance that it can fall down as per the price patterns. USDINR, that is where the sad part. The rupee is still at the weakest level. There is absolute no indication of the rupee strengthening. USDINR currency pair is 82.7 and it was flat closed since several weeks. It has been flat and meeting this 83 nearby kind of levels, very close to the all-time low level. So that's disappointing. These markets has been flat, low volumes are there. It is full holiday seasons. Every index, Dow Jones, S&P, Nasdaq, all of them plus or minus 0.5%. This movement is what has happened. It's in sideways momentum. Definitely, the holiday seasons, nothing will happen in the US market. But remember that it is having a descending wedge on the weekly basis on all the indices of S&P, Nasdaq, and Dow Jones, and it has confirmed the reversal mode. So now, will it come down to the reversal, or would it hold somewhere and then break out from that wedge? Is the question. So let us keep a close watch. Right? How long would it stay? How ferocious would be the fall? See if it is going to reverse and go back to the bottom of the wedge. So these are things that you have to watch out for. US markets need to be closely observed in the coming days, in the coming year. Crude oil again shooting up 1.4% and 80 crossed 80.47. We had dreamed of it going below the 75 levels. It almost went till that, and now it is in a trend line channel. You can see that clearly. It is bouncing up in the last 3 weeks very slowly, which is good, but as long as it doesn't move beyond this 90 levels, right, things should be fine. But if it is moving above the 90, then we have trouble, along with the falling rupee. If the crude also is spiking up, we have things that may go out of hand. Gold is a hedging instrument, has been rising steadily since multiple weeks, ever since the market is showing some corrections. And it's a head and shoulder. It's a cup and handle pattern that is basically happening, but sideways it has been doing since almost 1 or 2 years, and then it has failed to break out earlier this year and 2021 also. It has failed to break out from the all-time high of 2000 plus levels, and it is showing some spike this week, and probably maybe attempting to hit hard at the 1876 resistance zone. That's what shows, but 1.4% of bullish spike is what is in the gold. US markets, I'll just quickly go through. I talked about that. So this is Dow Jones. It's in reversal mode. It was flat close in all the indices last week, but otherwise we are in a falling reversal mode in all the indices. You can see that, but we have great supports in the Nasdaq and S&P 500, and hope it holds there and consolidates before it breaks out of that wedge. On the upside is what we can hope for, but you never know. The Dow Jones has a long way to go towards the support. Right? So basically, all sideways momentum medium term is what you see for the US indices. Let's be closely watched, as I said before. That's it. Moving ahead, Two actionable stock picks. One is State Bank of India. It's the largest public sector bank. It's having some kind of bullish moment. No, this is marked wrong. Please ignore this. It's definitely having bullish momentum because it's above the RSI 60. It's taken a support. There can be a range shift of the momentum that can be found here. So the weekly charts, and there is some kind of consolidation and flag pattern that was forming here. But the big fall was completely recovered beautifully in one single day. One last week's big fall was recovered and much more than that in a single day. So it's a lot of buyers in out there. Also, it's in a parallel channel and it's in the mid. So every chance that it can spike up and go towards the 700 kind of levels to the upside. Every possibility is there. Right? If the banking stock is breaking out, banking index is breaking out, this would be skyrocketing. The established steel sector is also doing good. It's a range shift of the momentum. Momentum is above the RSI 60 or the medium term, and it's a rectangular formation that's happening. It's on the edge. Any price move with a green close above would mean that it's bullishness to stay. A breakout that may be happening. So on the shorter time frame, above price moves above this last candle's high, which tight stop losses below the entry weekly candle's low. No positional swing trades can be attempted, which can be rewarding. So that's a long trade on the JSW steel. The metal sector also is shining, right? And State Bank of India also long, right? Parallel channel up move can be expected with bullish momentum and bullish trend ADX. That stock fix 2. Now here is another trading strategy on the options that can be very rewarding. It's a double diagonal calendar spread that you are seeing here, where we are selling the near months put and call options, and the far month we will buy put and call options, and that way we'll get the benefit of the weaker spikes. So good, this the probability is good and the range is very good, right? As long as the market does not fall below 17,800 and 18,500 nearby zones, yes, it's 91% probability is there. RiskReward may not look attractive, but if you get out and on Wednesday, before Wednesday with 1 or 2%, you can consistently gain is the secret of the strategy, right? Margin benefits are there, it's completely hedged, you know exactly what you will be losing. That's a payoff for the double diagonal calendar spread on Nifty weekly calendar spread for the next week of January 5th, 2022. So that's a payoff. Now that we have studied about all those parameters, let's conclude and come to conclusion what we can expect for the next first week of the next year, right? So basically this week it was like the indexes has bounced back after a big fall of 5.7% of correction had happened, and it has bounced back. The market in short term, if you see, it's at moving average resistance, and medium term is basically it's consolidating, and it is having a good beautiful change in polarity bounce on the weekly basis that's happening, and it may likely to consolidate for more time before on a medium term it may take out the all-time high once again and move up, right? So that's what we can expect. So short term, the trend, the momentum, all of these things are sideways, but in the bands contracting sideways beginning. Right? Expansion is the fear of expansion. Downside is there on the Nifty. BankNifty at least it's having a bearish bias, and VIX is cooling. But remember, it had broken out with 15% move in a week, so that kind of inverting thing can happen. Open interest and put call ratio is not bullish enough. It's not bullish enough, right? USDINR is in reversal mode, price pattern. All of this will go by my view. Market view for the next week is mild bearish. Fyers are selling. Fyers are selling. But they were not selling big. But last week, Friday was the big selling, about 2,900 crores. Otherwise, they're selling small. They are not in a big selling mode. Dealers are doing the job of balancing act. So last week, fall can be just an exception, right? It can just be an exception. Where COVID fear came in the market, right? You might have found that an excuse to crash. But this week the recovery has happened. So yeah, so that's why it's a mild bearish wave that we have. The US markets are in reversal mode. We're already seeing that, so you have to be cautious about that. So it's not about 19k hitting now. It's about will we sustain this bounce? That's a question in front of everyone. So that's what we have to keep close watch on the levels that we have talked about earlier. So global cues, recession fears, inflation, interest rate hikes, Russian war and all these things are still there, right? The crude oil prices spiking up, etc. Rupee is absolutely not moving and only moving up, not at all strengthening at all. USDINR is only moving up, I mean, right? So these are all concerns. The VIX has spiked 15%, although it has cooled off half of that this week, but yeah, so there is uncertainty is evident from the spikes, right? So keep a close watch of 7,500 and 40,500. Or the bottom side on both indices, 80,500 and 43,500 on the upside, so in order to hope for a rally to continue. So those levels on the medium term is we watched, and then that's it, right? Always protect your capital in the new year of 2023. That's the best thing that you can do. Losing is part of the game, but lose less, right? And when you gain, hang on, and then have conviction in your trades. That's the best you can do. So always go for non-directional strategies in the options with hedged, completely hedged, where you know what exactly the risk whenever you play. You don't go for naked calls and naked puts and then carry overnight and then get into trouble. You can wipe out your capital if there is a black swan that comes in. So that's the only thing that you have to be careful. Not to worry about any small losses, but small losses are fine. The loss should not wipe out the capital. The only thing that you have to keep in mind. So wish you all a happy new year once again, and happy trading, happy learning, happy investing, and please subscribe and then help us to get this channel to 1,000 subscribers at least, and I'll be glad to provide with better quality and value added best content possible for the next year. I promise that. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.